JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 18th of May 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So you feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, let's see what's happening here and what happened overnight. Yeah, we can see Nikkei popped higher a little bit here and climbed back above this 28,326 territory. So the decline didn't really happen further, and instead, yep, the index started pushing higher here. However, it still remains below this area which I was talking about, which I need to in order to see. I need to see a break off in order to go for some higher levels. So basically, this level here is the 28,760. Because if we do climb above this area, we would also be already placed above the this upside support line, taken from the low of the 19th of March of 2020. And at the same time, we could be placed above the 21-day EMA, and potentially more buyers could see this as a good opportunity to step in. So that's why for now I'm going to take a bit of a neutral stand here. If it starts drifting back below this 28,326 territory, then yes, I'll once again aim lower. But at the moment, guys, I mean, it's a bit of a tricky one here, so that's why let's be very, very careful. Now, Hang Seng Index, the Hong Kong's Hang Seng, and look at this. I mean, after we've dropped below this area here, the support area, and I talked about this previously, my next target was this level right here, the 27,505 zone, which is around this 200-day EMA. And as you can see, the index failed to reach this area by just kind of a few points here, and started reversing and climbed back above this key resistance area, which recently was seen as a support zone. We're also trading above the 21-day EMA, so that's another positive sign. And in a way, now we could see this one pushing further north. However, let's examine something else here, and let me just grab a trend line and basically draw it from here. So, and this is where we're gonna get. We're going to get a downside line taken from the high of the 18th of February, which could still be in play. So even if we push further north here, yes, we could aim for slightly higher levels, but we'll be very careful near this downside line. If this downside line gets broken, of course, then yep, this could open the door towards higher levels. But I'll pick up on this one a little bit later, and we'll see how this will perform here. For now, I'm leaning a little bit more towards the upside, and but I'll be very careful near this downside line. The DAX, the German index, and yeah, I mean, yesterday kind of, I would say, it remained unchanged. I mean, fractionally in the red, yes, but basically kept near this this downside line, which, to be honest, I will get rid of, because it got violated, and then kind of yesterday it also got violated both ways, and that's why, I mean, no longer valid. And what I'm going to stick to for now is just this level here, the 15,420 zone, which so far is acting as a good area of resistance. And although we did get a few breaks here, and still we didn't see the daily candle ending above it. So that's why I want to be very careful here, very cautious, and I want to see if this one can actually finally push above it. But let me just check the cash index and where we are currently at. And I can see that the cash index is currently trading around that psychological 15,500 level. So this is quite interesting, and it seems that we might be able to hit a new all-time high today. But let's not rush into anything. Like I said, yes, the cash index is near this barrier. Can we push further above it? Well, let's wait and see. Let's wait for the opening bell, but it seems that maybe, just maybe, we could actually squeeze a new all-time high today. But let's keep an eye on down. And if we do that, then of course I'll continue monitoring this 15,502 zone, and if the price remains above it, then yes, I'll continue aiming higher here. So in terms of the downside, of course, what I would need to see here is a drop below the 15,215 territory right here. I spoke about this level yesterday in order to go for the downside, and because at the same time we would get a nice drop below this 21-day EMA. Now, jumping into DXY, the dollar index drifting further south, and yes, it is approaching this level again, the current lowest point of May, near the 89.98 zone. I need to see a break below it in order to go for further declines. So for now, long story short, I'm keeping a close eye on this 89.98 zone. If that gets cleared, this will confirm a forthcoming lower low, and further declines could be possible. Gold. Gold is, of course, enjoying the weaker dollar, and that's pretty obvious. I mean, you can see the beautiful move here above this downside line, and most importantly, that gold remained and stayed above this downside line, taken from the high of the 7th of August. So that means that for now, we will be aiming a little bit more towards the upside. But if you want to be a little bit on the safer side, you could keep an eye on this 1875 territory, which we're very close to, and because as you can see, it could act as a good area of resistance once again. So let's see if that's gonna be the case or not. But at the moment, I am leaning a little bit more towards the upside rather than the downside, as long as the price remains above this downside line here, taken from the high of the 7th of August, and then we'll take it from there, guys. Jumping into Brent Oil, so this one's interesting, and let me just zoom in a little bit here. So yep, we can see that the commodity is drifting lower, and higher, and for now we are kind of leaning a little bit more towards higher levels, but I would really prefer to see finally a break above this 69.92 zone, and not only a break but also a nice daily candle remaining above that. Yep, could be fine here, and if we do see that, then yes, my next target will be 71.2830 zone, approximately around here. And just to remind you what that level was, that's the highest point of 2020, guys. We've tested that area already this year in March, and we are now approaching that level again. So basically, if you're an oil bear, then probably it's not your time yet, unless we start seeing strong holdups near this barrier right here, the 69.92 zone. And that's why for now, guys, I mean, like I said, it's more of a bull game here, but we need some confirmation moves. So let's see if we can get those, and if we can, then yes, higher levels could be met. For the downside, well, first of all, let me get rid of this upside line because no longer needed. For the downside, what I would prefer to see here is Of course, ideally, I would prefer to see a drop below this level, the 66.50 zone, because yeah, this would confirm a forthcoming lower low, and yeah, further declines could be possible. So for now, let's keep an eye on this. Let's see how all this is going to play out here. But even if it drops below the 66.50 zone, there is still a chance for the bulls to step in and drive this one like this higher. So yep, keep your eyes on that one. Now Bitcoin did drift lower, and it found support near this 200-day EMA. It remained above it. It also remained above some of these hurdles, the 42,321. This is the low of yesterday. Then it also remained above the 43,171 territory, and this is I talked about this level yesterday. So this area provided good support. And now the big question here is, can we see a recovery back up? For this, I would need to see the crypto traveling back above the 47,112 territory, somewhere around here. Then, of course, I'll be very careful. Don't get me wrong, I'll be very careful with this hurdle around here near the 50,737. It also coincides with the 100-day EMA here, shown as the green line. But if that gets clear, then yes, a further, a larger correction to the upside could be possible. And the reason why I'm saying correction, well, as you can see yourselves, we're still trading below this little short-term downside line, taken from the high of the 14th of April. Now, Dogecoin. So, don't look at this one. I don't look at this one very often, but I believe that there was in the past a request here for Dogecoin, but basically it's yeah, there is a lot of hype around it right now. Can it move further north? Well, from the technical side, we can see that we are currently stuck in between these two lines. Yes, we're currently closer to the downside line, which means that there is a good possibility we could see a break of it. But yeah, for now, guys, it's still a no man's game here. So we need to see a clear break through this downside line. We need to see the daily candle remaining above it in order to go for some higher levels, or at least towards the high of the 14th of May, or the highest point of May near the 0.7390 zone, and then we'll take it from there, of course. Jumping into a few pairs now, AUDCAD here. So AUDCAD is drifting still to the downside. So the Canadian dollar is strengthening due to stronger oil. So yeah, I mean, even though the risk sentiment improved, it didn't really, I mean, it doesn't really support a Australian dollar here against the Canadian dollar. So you can see where the kind of the everybody's in right now. I mean, everybody's looking at, not everybody's, but a lot of people are looking at oil. Yeah, for now, I mean, looking at this picture, still the trend is to the downside. I mean, we have this downside line taken from the high of the 25th of February, so this medium-term upside support line. We could potentially draw this as a possible falling channel here, but let me just adjust something here very quickly just to see if this is going to work out actually or not. But okay, it's I would say even maybe not even a falling channel. This could potentially be a falling wedge pattern, which of course, according to all the TA rules, you know that these tend to break to the upside. But at the moment, guys, I mean, we're of course, as long as we're within this formation, I mean, it could still drift lower. It could rebound, of course, but if it struggles to overcome the downside line here, the upper side of the falling wedge, then yep, another slide could be possible. So either way, basically, for now, what I'm going to do here is I'm going to stick to the yesterday's low near the 0.9338. If that gets cleared, yes, I'll aim for further declines, and then yes, maybe I'll probably remove this downside line here, the lower side of the possible wedge pattern here for now. So basically what I'm going to do here is I'm going to stick to some of these key support levels. If we, like I said, if we break yesterday's low, Sorry, even not yesterday's. I think this is. Sorry, not yesterday's. This is the 13th of May. So the current lowest point of May. If we clear that level, then this will confirm a forthcoming lower low and further declines here towards the low of the lowest point of November of 2020 or to the lowest point of October here. These are the levels that I'm going to be aiming for. But again, as I said, in order to aim for those, we need to see that clear break below the 0.9338 zone. AUDJPY. So this morning we had some news. We did get the RBA meeting minutes. So from the meeting earlier this month. So yeah, I mean at the moment, I would say. It's an interesting situation here on AUDJPY. As you can see, the opposite here is happening. Here, Australian dollar is strengthening against the Japanese yen, but that's understandable because the risk sentiment is currently on the risk on side. So a lot of people are in equities again, we can see here the AUDJPY here is pushing north. I mean, there's some Australian dollar buying, and yes, of course, no one's getting into the yen right now yet. So for now, what I'm going to do here is I'm going to, of course, as always, draw some lines. So basically, for now, I mean, we can keep an eye on some of these upside lines here. Let me just double check if this is going to work out or not. If this is a good one, there we go. Perfect. Beautiful. This one's taken from the low of the 30th of October of 2020. And yep, we are still trading above it. So in a way, as long as that line remains intact and we see the daily candle remaining above it, then yes, there is still a chance for a further move north. So however, if you want to be a little bit more on the safe side, then probably wait for a pop above the 85.45 level right here, at least above that. But don't get me wrong, I mean, we would need to overcome the current highest point of May here near the 85.81. But still, we could already, like I said, start looking at higher levels if we clear this 85.45 level right here. So keep that in mind. For the downside, yes, as I said, we need to break of this upside line, and also just to kind of strengthen the downside scenario, a drop below the 84.20, or let's round it up here towards 30, 84.30, a break below that, yes, may open the door towards lower areas. Now, jumping into NZDCHF very quickly, so also an interesting one, still trading below this downside line, taken from the high of the 25th of February. However, it remains still above this 0.6474 level right here, which is the lowest point of April. So currently that area is still providing good support, and in a way, I would say for now, we will remain cautiously bearish, because looking at this picture, I mean, this is not really painting a very positive picture. For the upside, it needs to break above the this downside line and a push above the 0.6576 level. USD JPY, so drifting to the downside here, and now this is a bit of a it's a bit of a kind of a mixture here right now with all the pairs here. So it's not that the yen is strengthening, it's the weakness of the dollar, and that's why we're seeing this result here. So I'll stick to the same game plan. Basically, yes, we are still trading above this upside line, which in a way could continue dictating the rules for now, maybe. But if this alliance gets broken and we see the rate falling below the 108.44 territory, somewhere around here, then yes, this could lead to some further declines. We do have some data coming out today as well from the U.S. We do have the building permits and the housing starts. So yep, those are on the agenda. Also, we have the preliminary GDP figures from Eurozone. So that's why for now I would say we'll be careful with the euro as well, just to see how those figures show up to be. But yeah, jumping into the next pair, GBPUSD, so it's pushing higher because basically we do have we have some data, unemployment data that came out already from UK. So unemployment improved, going from 4.9 to 4.8. Employment change improved as well, so that's a good result. However, average earnings in index, including bonus, declined. So wages have dropped. So basically, unemployment improved, but wages have dropped. So for now, I mean, the market participants are taking this as a positive, and you can see that we are seeing a slight push here above this this resistance area. I spoke about this recently, and this 1.4167 territory is getting currently cleared. Then this 1.4182 zone is also getting cleared. So yeah, I mean, at the moment there are some kind of positivity, I would say, and yeah, I mean, my next target is the highest point of February near the 1.4243 level, and then we'll take it from there. Euro Aussie. So Euro Aussie also something that I'm keeping an eye on because we are very close to this level, the 1.5692 zone, which for now it's acting as a good area of resistance. We are trading above some of these upside lines. One of these upside lines here. This upside line is taken from the 25th of February, and in order to go for some higher levels, yes, I mean, of course, the short-term trend is kind of to the upside. It seems that the pair is forming a possible ascending triangle here, which, of course, according to all the TA rules, tends to break to the upside. So that's why we are not really gonna do anything until we see a clear move above the 1.5692 zone, and not only a clear move, but also a daily candle staying above this area. And then, yes, our next target could be around here, near the high of the 28th of January here of this year, and near this 1.5947 level, and then we'll take it from there. Of course, on the way towards that level, we do have this 200-day EMA, which could also maybe provide a bit of a hold up, just a temporary hold up, but if the buyers are still strong, then yes, further acceleration to the upside could be possible. And finally, EURUSD. So okay, so here we have a nice beautiful move here higher, and this is what I talked about with you guys last week and yesterday as well, that in order to go for a further move north here, we need to see a clear break above this hurdle. So at least a push above the 1.2182 territory here, which is the high of the 11th of May, or I could say that the previous highest point of May, because we already violated that level today. But if it stays above it, then yes, we could go for a further move north, guys. So keep that in mind. For now, that's the little game plan here on EURUSD. Unless this area provides good resistance, and then the pair starts dropping lower. To be honest, then I would probably look at, I would need to wait for a break of this upside line before, let's say, examining further declines here. And then I'll pick up on some of those, some of the levels, depending on where we're going to be here, if we are going to break this upside line. But at the moment, I'm leaning a little bit more towards the upside. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. Thank you very much for joining in, and thank you very much for your likes, your views, guys. I really appreciate that. So if you want to catch me later on, at my trader's tea time, as always, that's 12:30 GMT time. For now, have a beautiful trading day, guys. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.